Have you ever wondered what it would take to become one of the wealthiest families in America? It definitely does not involve you taking out high interest debt from a bank to buy a new car, pay for college, or fund a business. Instead, what the wealthy elite have been doing is borrowing money from their own personal family bank and paying themselves back. The family banking or infinite banking concept is a unique strategy that many wealthy families like the Rockefellers have used for generations to sustain and grow their wealth. And today, many savvy investors use the infinite banking concept to purchase real estate or fund a new business venture. And today we're going to dive into how you can do it too. But first, what is infinite or family banking? It is a method of using permanent high cash value life insurance policies to build a multi-generational family bank that you govern the rules of. The concept of infinite or family banking got coined back in the 1980s by a gentleman named Nelson Nash, who eventually wrote an entire book on it called Becoming Your Own Banker. Since then, there have been many other books written on this topic, including What Would the Rockefellers Do by Garrett Gunderson, as well as The Family Bank Strategy by David T. Phillips. I recommend reading all three. Now you're probably thinking, this sounds a little morbid. I thought life insurance was only to pay out when you die. How do you use it to create your own family bank? Well, yes, this is true, and the primary reason people purchase life insurance is to protect their loved ones financially when they pass away, and also to pay out any outstanding debts that they have. But the rich understand one very powerful concept these permanent life insurance policies can do. They can sustain and grow their wealth from generation to generation. Oh, and did I mention, it's all tax-free. Now keep in mind, I did not say that rich people get rich by collecting on dead family members' life insurance policies. That would be a little morbid. I specifically said sustain and grow their wealth from generation to generation. You are responsible for creating the wealth that you are going to funnel into these high cash value insurance policies. And here are the steps that rich people are taking to build their own family bank using these plans. Step 1, set up a personal family trust that will act as your family bank or vault. Typically, an irrevocable trust is used because it cannot be changed. Then from there, all of the family's assets are funneled into it. Now keep in mind, I am not a licensed estate planning attorney. I'm just simply sharing with you how this concept works. I highly encourage you to sit down with a licensed estate planning attorney to find out what type of trust is right for you and your family if you are interested in this concept. Step 2, everyone gets insured. They have every family member that wants to be a part of the family bank get a permanent high cash value insurance policy on themselves. And it's very important these plans are set up correctly. For starters, they are using them to grow cash value. Every form of permanent life insurance has the ability to do this, not immediately, but over time. Think of it like a savings account, right? Your savings account doesn't immediately have $1 million in it unless you put money in it and it grew to that, correct? It works the same way with your cash value inside of your insurance policy. It's going to grow slowly over time by you overfunding the cost to own the plan. And the cost is determined by the client's age, health history, criminal background, and how much life insurance they are getting. Every dollar that owner is going to put into those plans in excess of what it costs to own it will spill over into your cash value bucket that will grow and compound tax deferred, accessible to you in the future, all tax free through different policy loans. Now, if you want more information on how these loans work, you can check out the video that I have linked above. The key is we want to keep the cost of the policy as low as possible so your cash can grow quickly inside the plan. We accomplish this by getting the least amount of life insurance required for the most amount of money that you want to be saving per year. Back in Nelson Nash's day, they used whole life insurance because it was the best product on the market at that time. Today, a lot of the times we are seeing index universal life insurance used, or what we call IULs, just simply because they have the chance to earn higher interest. If you want more information on how IULs work, I have linked a video above. And step 3, the trust becomes the owner and the beneficiary. The family member is just the insured on the life insurance policy. And this does one very important thing. It ensures that if a family member were to go and borrow money out of the family bank and either A, pass away before they could pay it back, or B, choose not to pay it back, that the family bank will be replenished by collecting on the life insurance policy when that family member passes away. Now, this is a little morbid, but it's very important for sustaining the family bank long term. And step 4, the trustees act as the bank tellers, and they are responsible for giving out the loans to the family members and monitoring how that money gets paid back. This ensures that the family bank will remain intact and last from generation to generation. Allowing your family members access to loans from your family bank also ensures that they won't ever have to deal with the traditional banking system of going and making an appointment with a banker, filling out a bunch of paperwork, and hoping and praying they get approved for a high interest loan. Because you are creating your own family bank through a trust, you have the ability to put in some very specific guidelines on why someone would qualify to borrow money from your family bank. For example, let's say one of your children want to borrow out money to purchase their first car. You could have a requirement in there that the trustees cannot grant them a loan unless they can show proof that they are working a part-time job where they have the ability to pay that loan back and they are going to school full-time. Maybe that child grows up and wants to borrow out money to go and pay for college. You could have a rule in there that they must maintain a certain GPA. Maybe they want to borrow out money to go and start a business. You could put a rule in there that they must create a business plan to present to the trustees, as well as a loan repayment agreement. All of these requirements are not meant to torture your family or your children, but merely put in place to ensure that that family bank grows and is sustained from generation to generation. This also works for you. Maybe you want to go and take out a loan from your family bank to go and purchase some real estate and get into some rental properties or possibly a fix and flip. You have the ability to do that. Imagine never needing to sit across from a banker again, trying to apply for some high interest debt. You can just borrow money from your own personal family bank and pay yourself back. This is exactly how the infinite banking concept is designed to work. Now let's check out an example of someone who is 45 years old wanting to set up one of these types of policies to become their own family bank right away. For the sake of this example, we're going to use an IUL policy because they have the chance to earn higher interest. Now let's say that he is a healthy 45-year-old male wanting to save $100,000 a year into an IUL policy that's earning a conservative 5.79% rate of return. And again, most IULs earn significantly higher than that. We're just being conservative. He would need to get approximately $1.5 million in life insurance to do this. After the completion of year one, he would have approximately access to about $50,000 that he could borrow out of his family bank. After year 5, approximately $515,000. After year 10, approximately $1.2 million. After year 15, approximately $2.14 million. And after year 20 or age 65, approximately $3.42 million is in his family bank, accessible to him, all tax-free through policy loans. Now, maybe you're a little bit younger and $100,000 a year sounds a little steep for you. You can get started by saving something smaller on a monthly basis to build your family bank over time. Let's say, for example, that we're looking at a healthy 35-year-old male that just wants to save $1,500 a month into an IUL policy, earning that same conservative 5.79% rate of return. He would need to get $400,000 in life insurance to do this. By age 40, he would have approximately $91,000 available to borrow out from his family bank. By age 45, approximately $211,000. By age 50, approximately $380,000. By age 55, approximately $609,000. By age 60, approximately $918,000. And by age 65, approximately $1.33 million inside his family bank available for him to start to borrow out, maybe as an income stream in retirement that's accessible, all tax-free. Pretty cool, huh? That's basically everything you need to know about how the rich are setting up their own personal family banks by leveraging these high cash value insurance policies, such as IULs or whole life back in the day. Now, the key is these plans have to be set up and structured correctly, and you also have to know what you're doing when you're inserting a family trust. I highly recommend that you connect with a licensed financial consultant that can guide you through the next steps on creating one of these family banks for yourself. If you're looking to work with somebody and you live in the United States, you're welcome to connect with me and my team by simply clicking the link in my bio or in the description below. If you would need a referral over to an estate planning attorney, because again, I am not one, I'm happy to connect you over to the team of attorneys that I work with that are virtual all across the United States. I hope you liked this video and you got a lot of value out of it. Please share this video with anyone you can think of that really likes the idea of creating long-term generational wealth for their family. And if you like this video and you want to see more videos just like it, click that subscribe button and hit the bell to turn on notifications, because I release a new video every single week and I wouldn't want you to miss it. Looking forward to seeing you back here next week on YouTube.